Hey Pete, what's up? You hear me? Mm, Beautiful, yes, sir. Now you're good. All right, cool. We're gonna go live here. I'm gonna get to you in about 5 minutes. You the man. Thank you, sir. You too. I hear you. I'm in. Okay, we're gonna go live here. Here we go. Okay. All right, we are live. Las Vegas with the win at the conference center here. And it's a pretty fun day because we got markets firming up. We got the Prosper Trading Academy live event going on. Scott Bauer, the whole crew, Charlie Moon joining me. Mo is going to be here. We got Steve Orr, Big Beat joining us. Markets are looking okay. So Chicago Future Finance is on the move. We've got a pretty nice little spot here. My favorite in Las Vegas, of course, is the Wynn and or the Wynn Encore. So we got a little Frank Sinatra maybe playing in the background, setting the vibes right for us as we get a pretty good session with the S&Ps. Little change, but they're going in the right direction, so that's not bad. Let's look at the charts here. This is going to be a more mobile version of the show than what you're used to, of course, with the 300 plus people behind us in the pit at the SIBO, but same idea, hitting the same topics with future of finance. And that means event contracts, it means a little bit of maybe Vegas style too, given our gamble hits. We're going to talk a little poker too. I got a fun guest joining us here on the show today. Jonah LeBranch is breakout poker star. Let's go into the market though. Let's look at what's going on with the S&P 500. Right now, you do have Bitcoin bouncing about 2.5%, about 3% to 94K almost. S&Ps looking pretty calm, little change, basically sitting below the recent all-time highs. 69.20. We're real close at 68.40 right now. So I guess the hope basically is that we keep pushing for all-time highs. We talked about this at some length over the last several weeks, that it looked like markets were ready to firm up and continue to move their momentum higher. The signs were there, basically higher highs, higher lows. Once you got the Fed getting ready to cut, I think all of that looks like a pretty good situation for records. And so that's where we are. It's also why the risk radar has been yellow for stocks while it's been red for coins. Looking at the weakness in crypto, it hasn't bothered stocks. And now with crypto firming up, MicroStrategy up about 5%, that means that we've got a little bit of rebound happening there. Now, that being said, you still got a ways to go for the crypto markets, whereas for stocks, it kind of looks like we're basically there. I think the key things that we're looking at narrative wise are, of course, the Fed looking like it's going to cut again next or this week, basically. The question is what happens after. And I think that for the most part, you've got a pretty welcoming Fed, especially if we're going to get the administration to even get a more kind of dedicated political operative at the Fed, but that's something future conversation for later. I think what's most important here, equity wise, is if you look at the SMH, we're just below all time highs for the semiconductors. And if you look also at the Russell 2000, another pretty good day for the rut. Look at the small caps pushing to highs, another good potential breakout there. Charlie Moon, disciple of trend here at the Prosper Trading Conference, talking a lot about trend. The Russell looking really good. There's the chart there. The small caps at 25.40. So VIX is up a little bit. So you got a little bit of creep involved today, but it's not too big of a deal when you're at 16.7. Also note the dollar there firming up. Interesting if the Fed's going to cut this week, if the dollar firms up, if we see rates move, which are also climbing a little bit with the 10-year pushing to 4.2. If you're going to add interest rate cuts into an already stable economy, then that could be a pretty good positive outcome. Generally, keep in mind when the Fed embarked on its cutting campaign, you did get the overall kind of shift higher in the 10-year yield. So keep in mind that could happen again, but it doesn't have to be a problem by any means. Joining me here at the top of the show today, Mr. Pete Najarian, joining from Market Rebellion. Pete, what's going on, sir? Hey, you know what? Uh, I worked for it, I was in Chicago and it was storm and snow. And then I got stuck in Arizona because it was snowing so hard. So I deserve some sun, Pete. You guys are the ones that are always in Florida. So, I'm trying to just go somewhere with a little sun. Okay. Hey, I believe you, man. But here in Vegas, it's also a little special, little drop of the gamble or hit that we do because it's the World Poker Tour happening right now, WPT. Pete, tell me what you're looking at in markets, though. We'll get to some sports. We'll get to some other stuff because we talked about the Bears. Maybe didn't go the way that some of us were hoping for. But let's start with markets because we do have the S&P close to all-time highs here. Boy, does it look like we want to go. The fact that we've got the firming in BTC and Master, I feel like is a nice kind of just assurance that whatever potential there was for like a monster drop off in crypto to drag stocks has been. I mean, we talked about it, you can have a crypto sell off and it doesn't mess with stocks anymore. And I think we've proven that out because stocks are so close. But then the fact that you also didn't see this kind of trend with a strategy creeping up again, it still doesn't hurt to have those signs of risk on playing along, Pete. So I think that's a point well made. What do you guys watch in terms of where the flows are showing up in crypto land? Is it publicly traded stocks? Is it Coin, Master, some of the other stuff that's out there? People are kind of going for some of these ETFs that are using income, and there's all kinds of ways to get exposure to it. Okay. Coming back. Okay. That's kind of interesting and pretty far out of the money bids for VIX calls, right? I mean, that's like looking for a major relapse in the market. Okay. The move for the Fed, I think, is cut basically all the way, Pete. Fed is a cut guaranteed. Okay. All right, Pete. You the man. I like the message about the VIX calls. Like the message about the Unity software breaking out, seeing some risk on there. And also, I think with the Fed cut coming, that's basically a sure thing, pretty much. It looks like at this point. What happens afterwards, though, maybe a little bit of a different situation. But for now, it looks like we got a supportive Fed. Thanks, Pete. Appreciate you. All right, awesome. All right, we're going to take a little short break here, come back and talk a real kind of future of finance. Here's what's fun too. You can put stakes now in players, whether it's poker or any type of professional gambler. You can get a piece of someone that's got a good track record. One of them is a breakout star that I guess I've donated to in the home leagues over the years. Jonah LeBranch is joining me here in Vegas after cleaning up about 1.4 million WSOP for total live winnings and nearing 2 million. So we're going to branch out our conversation about how to trade, invest, speculate, and manage risk here, of course, in Las Vegas. We'll be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction. With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction. With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
back to Chicago Future Finance live from the Wynn Las Vegas. I'm Oliver Renick, and we are stretching our speculation definition and investment definition to include poker playing. I'm joined by Jonah LeBranch, breakout poker star, aka the Phoenix Kid, who had a nice run in WSOP last year. He's here playing the World Poker Tour as well, which is happening live at the Encore, probably the best poker room in Vegas. Jonah, great to meet you in person.
You as well. Thank you for having me.
Absolutely. Good to meet. We've battled a few times online, and you are a killer on the table, on the felt, as they say. And last year, you cleaned up, didn't take any trophies, but two big final tables for WSOP. This is a show that's about investing, trading. We're here at the Prosper Trading Conference where people obviously trade mostly, but a lot of them I know are hitting the tables here. They play cards. There's a few players that are former poker guys. So to kind of have this conversation about how you think about bankroll management, how you think about strategy too, I think is interesting. But first, just kind of tell me how last year was and what that felt like to kind of have a big breakout year for poker. But I think a lot of traders know that feeling too when you've been grinding and then you finally explode, basically.
Yeah, for sure. I mean, I was lucky enough that when I first started playing poker, I started off with a really good hit. I won a ring my very first year. And so, just grinding and studying and trying to be better every single day. And then when it finally all comes together one summer and you have an amazing summer, it feels great. You just put a ton of work in and try to make the most optimal decisions at each point, then you're happy when it all comes together.
The optimal decision making for poker, one of the big things different between poker and trading is that in poker, you've got GTO, you can study the machines, right? You can study what the math and the simulations tell you is the exact move. You can't really do that in trading.
No.
How does that factor into your kind of career? Do you spend a lot of time buried in the sims?
Yeah, I mean, I did for a long time there, but once you play versus real people, you realize that GTO is a good baseline to have, but then you kind of have to deviate based on who I'm playing, right? So it's good to know the baseline and understand how things work, but then you have to change based on, if I'm playing this guy who's really good versus I'm playing this guy who is not very good. I'll play very differently versus two different people.
If one thing that I think about is if you've got two players, I mean, GTO is basically you're trying to play precisely to a computer-driven outcome, right? If you've got two people doing the exact same thing, do you bounce off each other, or is that kind of where you try and find that sort of marginal edge? And how do you pick up on that if you know someone is as equally as good of a GTO studier as you or better? How do you manage that?
I mean, when you're playing versus a very good player, you just try to play GTO as possible. So when I'm playing high stakes, I'll just play pretty GTO. But realistically, no one plays like that. It's very hard for anyone to emulate that specifically. So there's rarely situations where you're going to play it exactly, because when you mess with the solver and try to node lock certain things and change different outputs, if you change the smallest thing, it will reverse in another way where the output is completely different than GTO. So, and again, when you're playing versus humans, they don't really play GTO baseline at all. So you have to really, there's a lot of metagame involved in realizing, you don't do this, so I'm going to do this. And it's a great game of like checkers, chess.
Yeah.
Yeah.
So the small changes that one makes, the small non-optimal changes have big reverberations outward. So that then creates an opportunity for you, which is, as if the opponent, but you also obviously don't want to make those mistakes. In trading, I feel like you look for some of those at scale where you see a stock that looks totally out of whack, or you say, okay, this thing's a massive bubble. Sometimes it's in trading apparent, but it's oftentimes not. It'll be apparent if we find out, let's say, a company has been fraudulent, right? Then we know that stock's going to crash. What are the signs that you look for? You go, okay, this guy is not playing correct. This opponent is a broken computer.
Yeah, I mean, there's tilt in poker. That's a big thing where people they lose a big hand and they start to play crazy, and then, I mean, you can tell sometimes you see steam coming out of their ears, so it's an interesting game. You just really have to pay attention to the volatility of others and play based on that. So yeah,
it's interesting the way you frame that. Pay attention to the volatility of others. We spend a lot of time in the show thinking about volatility, ways to measure volatility. Are there key things that you see repeat often where you go, okay, this is a player that, is on tilt or something? I feel like if I'm playing the 1-3 room, at the encore on a popular, vacation time, you're going to see pretty obvious tells. A guy's drinking,
Yeah.
somebody's in there to have a good time. But when you're playing at the stakes that you're playing at and you're playing in final tables for massive, massive events, I can't imagine that there's a lot of leaks that are showing up.
Yeah, no, not really. When you're playing versus bad players, they lose a big pot, and then you already know that it's about to happen. They're about to lose all their chips because they're gonna try to make up for the losses that they just took. But when you're playing versus great players, or when you get to a final table, usually the people that get to the final table are good, studied, and ready for the situation. So usually, if they lose a big pot, they're not gonna tilt as hard or change their strategy as bad as some.
You are right now currently playing an event that I think kind of speaks to your discipline as a poker player. It's everybody's dream to make final tables in WSOP, which you did. You cashed out. Hendon Mob has you at roughly $2 million for lifetime winnings. Hendon Mob being kind of the most standardized, popular way to track people's performance. I'm just pulling up your page right now. But what's interesting is you're still grinding and you're playing satellites to satellites, which is
Yeah.
basically like, let's say there's $1,000 game. You play a satellite for $100 and for every 10 people an entry. But you're playing like satellite to a satellite for a particular event. What does that say about you and kind of the way you approach managing your bankroll even after you've had big wins?
Yeah, I mean, I want to be able to use my wins for the long term. So I'm not trying to, I had a really good summer, won over $1 million. I'm not going to play $1 million buy-in. That would just be dumb. I wouldn't be able to last in the game of poker. So, I just want to be able to keep my risk low, play, sure, my bankroll has risen, but I want to be able to stay and play for 10, 20 years later down the road. So I can't be just playing crazy buy-ins and losing so much money that I can no longer be in the game.
Looking at last year, $1,500 millionaire maker, 316 grand. This was the big one though, $10,400 buy-in for the Wynn Summer Championship here. This is the classic, which you got fourth for almost $1 million, 800K.
Yeah.
Can you give us an idea how you figure out the math for what your buy-ins are? Because obviously, you know, you didn't fire $1 million tournament, but right after you want a big payout in WSOP, then we see a $10,400 entry show up. Um, is that supported by investors, or is that how do you kind of do the math on what you want to put in versus your winnings versus what others are willing to put in to support you, et cetera?
Yeah, sure. I mean, I've played 10Ks before, so it wasn't like a extremely obscene thing, but it's not something I do often. It's usually only the better tournaments, the more value, the more bad players per se.
Uh,
But so yeah, I sell action. And so if I'm playing like a $400 buy-in, I'll maybe sell 10% of myself just to lower the risk. But if I'm playing a $10,000 buy-in, I might sell 30 or 40% of myself in order to lower the risk. I don't really do exact math based on, they ABI is average buy-in, so they usually
okay.
some people try to keep the ABI the same based on their bankroll. I'm not really too into that. I kind of just go off the buying and try to kind of go off feel, honestly, which might not be the best decision, but it has been good so far. So yeah, I mean, I just try to be smart about it. The bigger the buy-in, the more I sell, and yeah.
The uh, Poker World now has staking apps people can use. When I think about what we're doing here with traders and different ways to trade and invest, have you thought about using those apps and how popular are those? Do you think that's a real viable kind of um, investment kind of world emerging? This is the show is Future of Finance. Is that a realm that you see as kind of a viable pathway for poker players and other gamblers to kind of distribute wins and losses?
Yeah, 100%. I think it's great for the buyer. It's great for the seller. You just have to find good value, good players, and figure out what works for both sides. For me personally, I have like 3 or 4 guys that just buy everything. So I personally don't use the apps, but I know a ton of friends that use them and use them for every tournament they play, and it's great for them.
One thing I noticed looking at the that Win Summer Classic last year is, correct me if I'm wrong, but and I don't know if you still are, but Faraz Jaka here at 12th. Was a mentor, a coach of yours to some extent?
He was one of my first coaches I had.
Okay.
Yeah, he was one of the first coaches, and then I went to a more one-on-one coach with my buddy Fausto Valdez. Um, and I think having one-on-one coaches versus a coach like Faraz. Faraz is amazing. He's a great coach,
Mhm.
but he kind of just makes videos for the masses versus having a one-on-one coach. You kind of get a little more intel on your specific game versus just a broad aspect of poker players. So yeah.
Mentorship is a big topic here, and a lot of these traders have had mentors. Scott Bauer, who's running the event here, has been a trading mentor of mine. How important is it to have someone in poker, or how much do you think you can really do it on your own? Is it absolutely kind of necessary to have someone to say, hey, I know you're looking at Sims, you're doing this, but I've been to this event, I know how this place works, the kind of tailored sort of I've been there before, trust me, don't pound your head against the wall. How big of a role does that play?
It's huge. I mean, just having friends to, hey, I just played this hand. I'm not quite sure how I played it. How would you have played it differently? So having well-respected peers around you to bounce hands off of, bounce ideas off of, and kind of ask for coaching in a sense, like, hey, do you like what I did here? How would you play it? It's really helpful, honestly. And, having respect for those who you ask is key too, because obviously I'm not going to ask someone I don't respect their poker game. I'm not going to ask for their support or opinion,
Right.
but versus someone who like a coach or someone who's really strong or has been there, done that, I'm gonna ask for their opinion and really respect it.
Back to bankroll management and tracking. This is a big thing for traders as well, which is tracking, monitoring your trades, what succeeded, what worked, what didn't. I think for any type of speculation, professional speculation, whether it's trading, gambling, poker, is monitoring, when your red turns black. And I feel like for a lot of people, especially as you're learning, seeing it make that transition where, okay, I've been losing money trading or I've been losing money playing cards. Now I'm making money. How do you track that, and how important is that? Do you have that as kind of a key part of your process, or after you get a couple big wins, you're like, all right, I know what I'm doing. I don't need to keep track of every buy and every percent win
Yeah, yeah.
ROI.
No, I mean, I definitely keep track of everything, especially location. I feel like, especially because online, there's so many places to play. There's infinite amount of places to play. So I think keeping track of how you're doing on each of those type of locations is big too. Because say I'm losing huge here, but winning huge here, I should probably stop playing here and keep playing here.
Hmm.
So that's kind of how I use the tracking. Where okay, I'm doing great. I'm going to continue to do this, and that's all it is with poker. It's just showing up and the volume and continue to make the right decisions at each point. You're going to lose sometimes. You're going to make the right decision and it's not going to go right. You're going to make the wrong decision and it's going to go right. So just kind of having the humility to realize what is the correct play long term. And that's all we can really do as a poker player.
One other thing I want to make sure to get into, which has some pretty direct ties to trading and investing, but is a pretty specific part of poker. We might lose some people who are kind of casual players, but if you think about tournament play and where the money is made in tournaments, which is where you're a professional tournament player, the payout structure for tournaments is very much convex.
Sure.
All the money's at the top; it drops off real quickly. And because of that, you generally have a lot of entries and a lot of losses, but when you do win, you win really big.
Right.
For a lot of that, I think the overlap for trading is people putting on a lot of volume, where it seems like volume is a big part of it, but you also don't necessarily have to play that. You could be a cash player. You could find an in between. Basically, what we're talking about is variance, right?
Right.
Variance being a big part of investing, variance being a big part of cards. How do you know whether you're being subjected to bad variance or playing bad?
That's a great question. And that goes back to, having coaches or peers and asking them what the best decision is. But I mean, with poker, it's just, there's so many different stages of the tournament where like, say you're on the bubble and that min cash is great, but so you want to get the min cash because it's either zero or you double your buy-in. But then you have the other stage of you really want to make it to the final table because that's where all the money is.
Right.
So you kind of have to change your play style as the tournament progresses. And yeah, I mean, sometimes you just have to run with the variance. And again, all we can do as poker players is put the chips in when we think it's the right decision to be made, and that's about it.
If you're concerned about making them in cash, if that's important to you, should you be playing that tournament?
I mean, if I make this cash, I can not pay my rent. No, but
Right.
If you're playing a tournament and you get to that situation, sometimes you have to fold a really good hand. Sometimes you just have to. There's the aspect you get of doubling your stack on the bubble versus losing and being out is just not worth it. And so that's kind of where the risk management comes into play, where it's like, okay, is this worth it? Is it not worth it? And you kind of have to self-solve the situation as it goes, which makes poker a really fun game because there's so many different aspects and different things that go on throughout the tournament.
How do you think about your preference on both the style of play and the concept of variance as it applies to tournaments, cash, or PLO? Because I feel like if you think about No Limit, obviously a lot more variance in tournaments. But if you think about kind of PLO, I've kind of found as an in-between where you've got variance, but if you're used to playing, multi-table tournaments, PLO variance is a little bit, in a cash format, it's a little bit more familiar. It's manageable.
Yeah.
But still generally cash being a lower kind of variance play than tournaments. I think there's a lot of analogs for investing too, where if you just kind of buy and hold stocks, that's kind of your cash play, collecting premium, if you will. A lot of traders collect premium. And when you're raising blinds, when you're playing position in cash, you're kind of just collecting premium. Whereas in tournaments, you're really going for that big asymmetric payout. What is your preference in kind of those three categories of cash, tournaments, and then how do you think about PLO on the variance spectrum?
So for just poker in general, for me, there's the difference between cash game and tournament play. Like the strategy is very different.
Yeah.
So for me personally, I've only studied 2-card No Limit Hold'em tournaments. So I kind of stick to that. As far as cash, I do it when it's fun or if the game's good, if there's a lot of bad players in it or if there's a lot of money to be made. So yeah, I kind of just go off of what I think is the best decision to be made in all aspects, to play the tournament, to play the cash game, what hands to play. And yeah.
The kind of final point is, do you think about poker as gambling?
I do not. No, I do not. There's decisions to be made. And if you are studied and if you know what the correct decision is, sure, you're going to have the bad variance and you're going to lose when you make the right decision. But in the long term, the goal is to go up. And so as long as you're making the correct decision and not gambling per se to, playing bad hands and trying to do things that are negative EV, then yeah, I don't think it's gambling at all.
It's the only game in the casino where you don't have to play the house.
Right.
So in theory, right, and math too, based, then you kind of have your only thing that's not gambling.
Right.
Do you play any other things for fun? If you get a nice win and you and your wife celebrate, grab a drink, something on the way to casino, do you have a preferred gamble game?
I dabble in Ultimate Texas Hold'em, unfortunately.
Okay. That's the least fun one out of the.
Yeah, I don't like blackjack. I don't like
stud?
roulette. No, I've never even played
No
that.
stud? I think it. Oh,
I don't even know how to play that game.
It's not too hard. I think that's the best gamble game for a poker player.
Really?
Well, because the Ultimate Texas Hold'em is
It's pretty boring, to be fair. But
Right.
there is also in that game, you know what the right decision is. There's charts and there's math and so it's pretty easy on my part.
There's usually only one Mississippi stud table if you're lucky too, which I think is a sign that the house doesn't love it. Sports? Any interest in sports gambling for fun?
I dabble, unfortunately, as well.
Okay, unfortunately.
I am a Lions fan. I'm a Suns fan, so
Unfortunately.
yeah, right. Yeah, so I'll bet on those sometimes. But yeah, I try to stay away, just because that's gambling, and I have a son, I have a family, and so I have to be pretty smart about how I work with my money. Yeah, I have a surplus or whatever, but it could all go away super quick. So you got to be smart about it.
Jonah, fun conversation. Congrats on the wins.
Thank you.
Congrats on the family. And thanks for coming on the show.
Thank you. Thank
Good
you for
stuff.
having me.
Yeah, very fun. And you're welcome for the donations in the home leagues, by the way.
Thank you.
Okay?
Keep
Maybe
them
not so
coming.
much donations, but there's some in there. Jonah LeBranch, pro poker player here from the Wynn, Las Vegas. Let's get back to the tournaments and they're busy. We'll be right back. Closing bell. We're gonna get a Prosper team to take us through the finish here as stocks. Have a decent day. Back in a moment.
There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. SIBO is on a 5-year growth streak making billions, and its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader, and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, This is where you do it. If you've got value, price will discover you here in Chicago, the future of finance. Join me, Oliver Rennick from SIBO, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back to Chicago Future of Finance. I'm here with Charles Moon, aka Disciple of Trend. As we close out the session here, Charlie was talking with the squad joining us at the Prosper Trading Conference here in Vegas about trend. And it looks like, Charlie, I mean, the trend for stocks looks pretty good, right? S&P's, I mean, a little changed on the day to the downside. VIX slightly higher, but I mean, when I look at this chart, it looks like we're about to make higher highs. We already did make a higher high compared to November. So trend in our favor, trend our friend.
It's relatively speaking, yes. It seems like the market's been fairly inactive the last 2 days in a wait and see mode. We did see a big push in crypto today, whether that's, short-term traders trying to take advantage of momentum. Maybe there's some positioning here because obviously a favorable outcome for the markets tomorrow is going to be a move to the upside, confirmation of a rate cut, possible guidance towards January consideration. That can make Bitcoin explode. So maybe there's some positioning there.
I think that's why crypto firmed up today, getting closer to the cut.
It was really weird. Bitcoin's action today was really weak, strong, weak, and then it jumped.
Okay.
And that explosive move actually happened while the US dollar was firming up as well.
Yeah, dollar did firm up a little bit today. Here, I'm going into the intraday for BTC. Nice pop early in the morning, then faded and did kind of fade there at the end.
Mm-hmm. Yeah, and again, you just don't normally see that type of movement against the U.S. dollar. You've seen the precious metals movement today. There could have been some correlative behavior where they're just looking to try and find an alternative space because we saw a lot of weakness in stocks. We saw a lot of inactivity in stocks. It was, when we kind of put stocks in a basket, they tend to move sympathetically. We saw a lot of divergence today. And so maybe it was just an irregular trading session where Wall Street was hands off and it was all retail. But, it just seems like we're in a wait and see. And when there was some momentum, traders just jumped all over it.
The potential for Bitcoin to firm up, it doesn't seem like it's a necessary for crypto at this point, given stocks did so well while crypto pulled back. But I still believe that it's a good barometer of risk appetite. So I think generally you probably are rooting for, the chart of BTC to recover at very least BTC. I don't know about, master MSTR, but at least that too now has got several, almost what, 4 weeks of firming here.
Right.
Not a terrible situation here. And look, I've said, even as the cynic, um, that it makes sense for BTC to go back to 100 to test it.
Oh yeah.
And I think for Master, what's the equivalent for that? If BTC goes to 100, where does Master go?
That's a great question. So today, from a technical standpoint, MSTR did something it hasn't done in quite some time. It's actually been doing it the last few trading sessions, which is exceed their 10-day exponential moving average, which is a good indicator of price performance for both short term and intermediate term. They got above that level today and spiked directly at the 21 EMA, which is kind of that last threshold that is a preventive measure for strong trending stocks, most notably to the downside, to really break through. Because once they break through, historically, the laws of averages just see the stock explode to the 50-day simple moving average. That's so far from where we are with MSTR that even with, a slight uptick in Bitcoin, we could see a lot of ground made up in MSTR just from the retail side wanting to get into momentum. Coinbase was rejecting and closed below their 200-day moving average. Again, a key barometer that Wall Street's always kind of keeping an eye on for a health and performance of a stock. So, from a technical base, we're seeing these stocks reject, but, sympathetically, markets go up, Bitcoin goes up, the laws of attraction are going to be there. They're going to be moving up, and they have a lot of ground to make up.
I like that, the laws of attraction for BTC and Master, which, I think makes some sense. Also, the fact that, again, equities are supported by the AI trade. I mean, we've talked about it ad nauseum. Look at Tesla firming up even while the S&P was slow today. Semis were down a little bit, but
Mhm.
Nvidia still at 184. It's just a lot of things that could have softened and did not.
hmm
Look at the SMH chart about to break out to all-time highs. I just don't see how these charts get that close or hold this well and don't continue the trend.
Right. Again, maybe perhaps if a huge curveball is thrown tomorrow, that would be kind of the only way, right? The market not expecting would have to make that immediate correction. But, kind of just to gauge where strength is, we look at, some of the primary or the strong performers, and we don't look necessarily into growth stocks. Let's take Micron, for example. Micron was a outlier, big breakout through 250 initially. They did retract a bit off of those highs, but they were one of those names that were just holding up and standing tall. We saw a lot of volatility in AVGO early until it finally broke the highs and ran. But, we're seeing Carvana stepping up. I mean, they made a huge move yesterday on the heels that they're going to join the S&P 500. Follow through today, just like you said,
Oh, man.
Tesla's moving as
Didn't
well.
even see Carvana.
Yeah.
That's how you know you're back, baby. Carvana's ripping. Going to the
All-time
moon.
highs.
Yeah, seriously. Okay. I mean, that's pretty good eyes. All right, Micron, Carvana, both good looking charts. I mentioned the SMH in general.
Mhm.
Pete, at the top of the show, mentioned Unity, breaking out again, Unity
Oh, yeah.
software. Any other names that stand out to you?
Yeah, Unity really does stand out. And again, we're looking at these names that are starting to make moves, especially ones that have been dormant or struggling. Two names that really stand out that have nothing to do with tech, but have a lot to do with retail traders' interest. Lulu,
Lulu.
starting to firm up a little bit ahead of earnings,
Okay.
and then Celsius.
Okay.
Celsius, again, crashed pretty hard off of earnings, got below the 200-day moving average. They were moving really early today while the markets were going down. So they were fighting against the grain. This 2 days in a row that they stood out in terms of short-term price performance. So it might be one to keep an eye on if this market does start breaking out at the highs.
CELH, almost forgot my Celsius there. Okay, so sell off from earnings now trying to firm up. So you're looking for stuff that might be able to kind of chase and catch up to
Yeah,
some of the others.
Yeah,
names that have already ripped.
it's tough to say I want to invest or buy into stocks that are at all-time highs, regardless of who they are. I get it with names like Nvidia, you almost have to. But if we're looking for game changer names, stocks that we're talking about recent history, have 40, 60, 80% upside. Why not look at quality names such as Celsius, who have that distribution deal with Pepsi, and Lulu, which I understand the competitive nature in the clothing industry. Viore has made a big push, but Lulu's also one of those names, just like Apple, that just has a built-in, loyalty brand,
Yep.
and people are, buying up the product and still buying up the product.
Charles Moon taking us through the bell and through our battery pack, man. I love that. All right, there he is. We're at the Prosper Trading Conference here in Wynn, Las Vegas. We'll be back tomorrow. Fun stuff. We hit a bunch and burned out the camera, baby. That's what Vegas is for. All right, good man. See you
See ya,
tomorrow.
brother.
All right. Thanks for tuning in. Hope you had some fun. I'll see you tomorrow.
Burned out the battery.